Hello dear students, welcome to Devika's Commerce and Management Academy. Acquisition of business, so far we got some idea. Now today we'll see essay problem. Simple essay problem, journal entries will write and balance sheet you have to prepare. Balance sheet format is just like company accounts format. Company accounts balance sheet, how we used to do? Vertical. First liabilities, then assets. Same format we have to follow. We should not prepare like normal final accounts, liabilities on the left side, assets on the right side. No, company accounts, balance sheet format we have to prepare. Okay, so easy problem, nothing to worry. So problem is given on the desktop. You can take a screenshot or note down. Okay, now remember journal entries. 3 journal entries we have to write. First, see the problem. I'll read each and every line slowly so that you can understand very well. Then we'll go to the solution part. The problem is given here. Welcome Company Limited was formed to take over the running business of Dinesh, whose balance sheet was as shown. Welcome Company is purchasing. Whose business they are purchasing? Dinesh. Dinesh is here vendor. Welcome Company is here purchasing company. Balance sheet is given here. Assets are land and building, furniture, stock, debtors, bank. Liabilities are creditors and capital. Okay. Now coming to the adjustments. What they said, the purchase consideration was agreed at 1 lakh rupee. Purchase consideration amount is given, which was to be paid. How to pay this 1 lakh rupee purchase consideration? They have given division of making of payment. One is 2,800 equity shares at the rate of 20 rupees each. Okay, and 3,000 preference shares at the rate of 10 rupees each. After making preference shares and equity shares, whatever balance is there, balance in cash, same like previous problem. Okay, now the company also raised further capital by issue of 7,500 equity shares, 20 rupees each, and cash at par 2,000 preference shares at the rate of 10 rupees each. They wanted to issue more further capital. This would be the fourth entry. 3 entries we know. Fourth entry, this is for raising the additional capital. Entry will be bank account at R2, equity shares and preference shares. However you are raising it, that will be the fourth entry. Pass journal entries in the books of company and also prepare opening balance sheet. Very simple journal entries already I have prepared to save the time. We know journal entries. First entry is for purchasing the business. Business purchase account at R2, vendor account. Who is the vendor? Dinesh. Journal entries in the books of Welcome Company Limited. Welcome Company is here, purchasing company. In the books of Welcome Company, purchasing company, we are writing. First entry is business purchase account at R2, Dinesh account, vendor's account. Purchase consideration amount, which is already given 1 lakh rupee. 1 lakh is written over here. So to save the place, I have written like this journal entries, but you have to prepare the journal entries format as I have shown you in the previous classes. Date, particulars, LF, amount debit, credit amount. Same format you have to prepare. Okay. So first entry is this. Second entry is for assets and liabilities taken over. Right. Assets will be on the debit side, liabilities credit side. All the assets one by one will write. So we found all these assets: land and building, furniture, stock, debtors, bank. So all these assets I have written. What are the assets I wrote? 1, 2, 3, 4, 5. All the assets debit side. Credit side, what do you write? Shares you are not supposed to touch. Apart from shares, we found only creditors. So creditors I have written. And also in the second entry, business purchase debit to credit side will get. There it was debit, now credit side it is. Second entry, what we have to do? We have to balance it, debit and credit. So when we balance it here, this is more, 1,04,000. 1,04,000 minus all these amounts. You got a balancing figure of 20,000. Which side it is? Debit side. So we have written here goodwill. This is balancing figure. Am I clear? Being assets and liabilities paid off. Second entry. Third entry will be for making payment. Making payment is after the balance sheet it is given. So how we are making the payment? To whom you are making the payment? Dinesh only. Debit the receiver. So Dinesh account at R. How you are making the payment? See, 2800 equity shares at the rate of 20 rupees each. So this is equity shares 2800 at the rate of 20 rupees each. So through equity shares you are making payment of 56,000 and 3,400 preference shares at the rate of 10 rupees each. 3,400 preference shares. So two preference shares 3,400 at the rate of 10 rupees. Rest of the amount in cash. Means 1 lakh minus these three amounts, which comes to 90,000. 1 lakh minus this 90,000 comes to 10,000. 10,000 made through the bank cash payment. Okay. So this is being amount paid off, being purchase consideration paid off. Okay. So this is over. And another entry is that we are writing fourth entry for raising the new capital. The company also raised further capital by issuing 7,500 equity shares, 20 rupees each for cash and cash at par, and 2,000 preference shares at 10 rupees each. They wanted to raise further capital. Whenever they are raising the further capital, entry will bank account at R, because by raising the funds we are getting the cash or bank. Debit what comes in. So bank account at R. What we are raising? Equity shares. Equity shares at the rate of 20 rupees each. So 7,500 into 20 rupees. And preference shares 2,000 at the rate of 10 rupees each. This is for raising the additional capital. Journal entries, are you clear? Same. 3 journal entries, extra entry we have passed. Now after this what we have to do? Prepare the balance sheet. Balance sheet is here. Same like company final accounts. Particulars, note number, any work note we wanted to show. So note number and amount. Now coming to the balance sheet. Just be careful, not so tough. First of all, balance sheet, what will write? Share capital. Or you can say it as a capital, na? So what is equity and liabilities? Heading. Equity and liabilities. This is the heading. Under this, share capital comes. We have lots of shares. Share capital amount, we can show it in note. So note number, let us say 1. Okay. Accompanying notes. Notes for balance sheet. First point, share capital. How do you got share capital? See how you are preparing share capital. First of all, in the problem it is given. So that's at the beginning 2,800 equity shares. Okay. 2,800 equity shares at the rate of 20 rupees each. This is equity shares. No, we'll write it clearly. Equity shares. 2,800 into 20. And later they have issued equity shares 7,500 at the rate of 20 rupees later, additional. This one, 7,500 into 20 rupees. First one was 2,800 into 20 comes to 56,000. Second additional is 7,500 into 20 comes to 1,50,000. So this is equity shares, and also preference shares are there. Preference shares at the beginning 3,400 into 10 rupees. 3,400. This one 3,400 into 10 rupees comes to 34,000. And additional they have issued 2,000 at the rate of 10. 2,000 into 10 comes to 20,000. Total up everything. Shall we use the calculator? If we total up 56, 1,50,000, 56,000 plus 1,50,000 plus 34 plus 10, 44. So the total comes to 2,60,000. So this share capital we are going to write. Note number 1, 2,60,000. Then after this, what else we have to write? On the liability side, we don't have anything else. Only creditors are there. Creditors we say it as a trade payable under the column of current liabilities. Okay. So this is share equity and liabilities. Second one is current liabilities. Under current liabilities, we can say trade payable. Trade payable means creditors. Creditors amount is how much? 4,000. We have nothing to write, so total is 2,64,000. So this is total liabilities. Now coming to asset side. First of all, we'll take non-current assets. Non-current assets. In non-current assets, we'll take first fixed assets. So fixed assets. What do we have fixed assets? One is 24,000 land and building and furniture 5,000. 24 plus 5,000 comes to 29,000. 29,000 fixed assets. There is a goodwill. In problem it is not given, but we came to know that there is a goodwill. We have created. Goodwill is goodwill. Where does it comes? It comes in the balance sheet as an intangible asset. So I'll write here intangible asset. Fixed assets is this intangible asset. We can write it in brackets goodwill. How much it is? 20,000. Okay, non-current assets we have written. Then after that everything comes to non-current asset, two types, fixed assets and intangible assets. What are the current assets? See, current assets, first of all, stock is given. Stock, we don't say it as stock directly. We say it as inventory. Under this inventory is how much? 39,000. Next, after this, debtors are there. Debtors, we say it as a trade receivable. Creditors, trade payable. Debtors, trade receivable. Trade receivable is some, what is that? Debtors. Debtors is how much? 9,000. Then after that, cash and cash equivalents. Cash and cash equivalents. So this we have to show it in the notes. Cash and cash equivalents. So how do we take this cash and cash equivalents? First of all, wherever we found the cash, that we'll take first. So second entry we have 7,000. Okay, 7,000. How do you got? This is from the second entry. Just for your understanding. So from here entries, journal entries, we have to take the cash. Where is the cash? Cash is in the second entry, 7,000 is there. 7,000 we have taken. And also third entry we have, third entry we'll see later, credit side it is. Debit side wherever we have cash, that we'll write. So that is 7,000 and also 1,70,000. This is also cash. So this is from fourth entry. Fourth entry we have 1,50,000. Fourth entry we have 1,70,000. Isn't it? So 1,70,000 plus 7,000. So this was 7,000, not 70,000. So it comes to 1,77,000. 10,000 already we have withdrawn. Total cash we have to receive 1,77,000. Out of that already paid 10,000. So we are deducting this 10,000. Which entry this is? Third entry. Why we are deducting 10,000? Already paid off. Paid off. So 10,000 we are deducting. So leftover is 1,60,000, 67,000. This we are going to write 1,67,000. Total up 2920 means 49,000. 49,000, 39 and 9,000 plus 1,67,000. 2,64,000. Both the sides equal, no? So balance sheet got tallied. So remember, where is the cap? Not fine. Cap. Yeah, see. So let me explain the gist of this problem. So first of all, we must understand journal entries. So this is total assets. We'll have to understand the journal entries. First three journal entries are normal. Fourth entry we got it new one. What is that? So for raising the new capital, whenever we are raising new capital, cash account attached to how we are raising, cash or bank. So bank account attached to preference shares we have raised and also equity shares, both. This is for raising the new capital. Journal entries we know. Now coming to balance sheet, same format. First thing is what we have done, equity and liabilities heading. Under that, share capital and reserves and surplus. Here you got goodwill. If balancing figure will be on the credit side, you could have got reserves and surplus. Then we would have written share capital under share capital, reserves and surplus. Now here we have goodwill. So we have nothing to write, only share capital we wrote. After equity and liabilities, we have current liability. Current liability, only one liability we have. Creditors. Creditors we say it as a trade payable. So together total is 2,64,000. Now coming to asset side, we have to write it in a different fashion. I didn't write the heading of assets. So first we'll write the heading of assets. Under that, two headings, non-current assets and current assets. Non-current assets means fixed assets and intangible assets. Fixed assets, we have two assets. The total is 29,000. Intangible asset, goodwill, you got it. Most of you will forget this entry. Goodwill. Goodwill, where is goodwill? From the second entry, we got balancing figure, this one. Goodwill is written. Then after that, coming to the current liabilities. Current liabilities, as per the problem, we found stock. Stock means inventory, will write. Then after that, debtors are there, means trade receivable. That is also we have written. And cash and cash equivalents, please remember this. Out of these journal entries, wherever you found debit side, cash means receivable asset. So here you have 7,000. 7,000 is written here, and also debit side bank here 1,70,000. 1,70,000 from the fourth entry. Second entry you got 7,000. Fourth entry 1,70,000. Already we received some amount. What is that? 10,000 we already. Where is that? Yeah, this one. 10,000 already we received. So that we have deducted. So total 1,60,000 is 67,000 is the balance at bank, cash or bank. That is here. So these two amounts, 1 and 2, share capital and cash equivalents, we have shown in the notes, accompanying notes to the balance sheet. So total both the sides 2,64,000. Simple problem. Nothing to worry. If you understand these journal entries, format is also, you know, in company accounts we have learned the same format. It continues in many chapters. That is why company accounts are important. Format is simple, na? So whenever you write the liability side, equity and liabilities, you'll write long-term liabilities. If you have, you could have written the second bit, long-term liability. and then current liabilities. Assets had only two. One is fixed non-current assets and current assets. Non-current assets, current assets. Non-current assets means fixed assets and intangible assets. Current assets, whatever we find. That's it. Easy? Screenshot? Yes. If you understand this problem, you can work out many more problems. Take out your textbook and try many problems. It will be easy for you. Okay? And please don't forget to share these videos. Everything is just for you only. Practice well, stay connected, check out the playlist, and have a bright career. Good luck.